13.5 explained. Before we go into journalizing any of our payroll register information, I want to just point out one thing here. The difference between the pay period ending and the date of payment. For whatever reason, I suspect it's because whoever wrote the textbook never ran a business for themselves. They have them listed as the same date. That is an impossibility. And I'll real quickly show you how and why I say that. Say you work 2 weeks and you're lucky enough to have a Monday through Friday job. So you work Monday through Friday, you work Monday through Friday, and this date right here is considered the end of the pay period. This is when you earned your money. So this is the period that we're talking about. Now, you don't get paid the same day that you finish working. You get paid the following week. So this date here, the 24th, this is the actual payment date. You earned the money up here, you got paid a week later. So why it is that they put the dates as the same, it's a little baffling to me. So let's get down to business here. A couple things we need to really discuss beforehand is we need to know what our salary expense is. We need to determine what are considered liabilities. And we need to determine what our cash in bank is going to be. Well, salary expense is nothing more than the total gross earnings for all of your employees. So this is what everybody earned if you added it all up. $1328.07. The liabilities is actually the total of the deductions. But that's broken down into, in this case, I think there's 5 different ones. Social Security, Medicare tax, federal income tax, state income tax, and hospital insurance. They're going to be listed individually as liabilities. Liabilities go up by virtue of a credit. Simple enough. And then we have our cash in bank. Well, we need to pay our employees. Where does it come from? It comes from the bank, from our checking account. That's the check you write from your general fund usually into your payroll account, because you want to make sure the money is there for your employees. You can pay the liabilities later, but you're going to definitely need to make sure that the take-home pay is there for them. So your salary expense, as every expense, goes up by virtue of a debit. So $1328.07. The liabilities all get listed individually. So you have the Social Security tax payable. That's $82.34. You have the Medicare tax payable, $19.26. You have the federal income tax payable, $184. You have the state income tax payable, $26.56. You have the hospital insurance payable, $20. Last but not least, you need to put the net pay in, otherwise known as the take-home pay, right? $995.91. So the liabilities plus the take-home pay equals your salary expense. 4 minutes, 24 seconds.